हाँ बोलिए रोहित जी।
सर जी, एक मींस के ब्रोकर के रिलेटेड क्वेश्चन है। जो डिपॉजिट और विड्रॉल रहता है उसके रिलेटेड, अगर आपके पास कुछ जानकारी मिल जाए तो अच्छा रहेगा। लाइक।
रोहित जी, खाली
हाँ।
एक रिक्वेस्ट कर रहा हूँ आपसे। ये अभी ब्रॉडकास्ट चालू है।
हाँ हाँ।
ये यूट्यूब पे लाइव जा रहा है।
ओके, डन। नहीं तो रहने दीजिए।
इसलिए आपको अगर कुछ पूछना है तो તમે मैसेज टाइप करो तो વધારે સારું।
अ, नहीं, थोड़ा सा उसमें ज्यादा पूछना पड़ेगा, तो अभी तो रहने दीजिए, ब्रॉडकास्ट चालू है इस वजह से।
हाँ ब्रॉडकास्ट, मैं ब्रॉडकास्ट जब बंद करूंगा सेशन के एंड में,
हाँ हाँ।
तब हो सके तो आप रुक जाइएगा। लास्ट में अगर कोई होगा नहीं तो
हाँ ठीक है,
डिस्कस कर
चलेगा।
सकते
हाँ,
हैं, ठीक है।
चलेगा, नो प्रॉब्लम।
अभी रिकॉर्डिंग तो नहीं चालू है बट
नहीं नहीं,
यूट्यूब
वो रहने
यूट्यूब पे
दीजिए।
लाइव।
मैं अंडरस्टैंड करता हूँ इस चीज को, इसी वजह से वो रहने दीजिए, पूछना सही बात नहीं।
ओके ओके सर, ओके।
बिल्कुल।
All right. Good evening and welcome back to the second session for the 10-week series that we started last Tuesday. And this is your host, Harsh, from GTCFX. A warm welcome. Uh, we have we are joined by Mohammed Bhai and Rohit Ji in Zoom, and we also have a few viewers from YouTube Live. So, a warm welcome to all of those who are joining us live from YouTube. And this is, if we talk about Dubai, this is a holiday week. So maybe that's why people are not turning up. But I think in case of learning and in case of the educational and live sessions, we should be having more participants in a few minutes now. Okay, thank you for joining once again, Mr. Rohit and Mohammed Bhai, and let's get started off with the theory portion. Today's story is okay. We have been now joined by Mr. Feng Wang, and I think Mohammed Bhai is facing some connectivity issues. So let's get started off with the disclaimer. Today's session is another story where, in the theory, we will be discussing. Yeah, so welcome back, Mr. Mohammed. We will be discussing uh, another wonderful story called the support and resistance. All right, let's get started. Mr. Feng, if you don't mind, there is no need for video capture. Thank you. Okay, let's get started off now. For those who are joining from YouTube, once again, a warm welcome, and please let me know if you do have any questions. I have a habit of toggling between the Zoom and live YouTube sessions, so I would be more than happy to address your questions. Thank you. And now let's get started off with the general risk disclaimer. Today's story is rules. So, just to review, just to remind, last session was about the Japanese candlestick chart patterns, where we discussed three major patterns to buy and three major patterns to sell. And also, we simplified the chart analysis, how to read a chart. We did simplify the process. And the next story, that is today's story, is after going through the sign language last time, let's go through the rules. And the rules are defined by supports and resistance. So let's get started. All right, over the counter margin derivative contracts, including contracts for difference and spot foreign exchange, are complex instruments and come with a high risk of losing money due to the leverage. You should consider whether you understand how these products work and whether you can afford to take the high risk of losing money. It is highly recommended that independent professional advice be taken before any kind of investing. All right. And in this webinar, this webinar is serves an educational purpose and will not include any financial recommendation or advice whatsoever. Thank you. So let's get started off with the few rules. Okay. So before starting, let's understand that trading is a game like any other game. You might be interested in playing. I'm sorry, but if you are requesting the AI companion for this session, I would have to deny the request for this session. I was not the management. I don't know if this is allowed or not. So I don't know, Mr. Wang, if it has been started by you, and I also see that it's been transcribed. I think if you started the transcription, I think all this is not necessary or required. But I've sent an OK message for the transcription at least. Okay, so let's focus on the session, please, and let's get started off. Thank you. All right. So what I was discussing was trading is a game as any other game that you might want to play. All right. So, okay, welcome, Brother Anthony. We are just starting off, so you're just in time, and thank you for tuning in. I'm still waiting for, okay, Brother Isaac is also here. I'm still waiting for Mark to show up because he was quite keen to start up, but I think he should make it up in a while. Thank you once again, Anthony and Brother Isaac, to join us. We are just starting. This is the first screen of the second story, is support and resistance. So let's get started. Trading is like any other game. For example, you are playing, or it could be a football or a chess or a badminton or a tennis or any other game. Trading is just like that game. All right, it could be cricket. So as humans, what would we normally do when we want to start playing a game? We don't know that game and we want to learn that game, a particular game, and then play it. As humans, what do we normally do? We just go and find out the rules of the particular game that we want to play, correct? That's what the first step we take. After going through the rules, okay, we start practicing and then we practice more and then we start playing it. Okay, this is the process as humans. So even when we want to play the game of trading, this is what we should ideally follow. So today's story, it's very brief. It's not lengthy, but by the end of today's session, we will clearly understand and we will clearly know what is support, how to identify it, what is resistance, how to identify it, and when I start the practical session, just by looking at the screen, all of us will be able to tell with confidence as to where could the next move be for that particular instrument. Like for example, we will take a Euro USD, we'll take a dollar index. Uh, at least these two charts we will analyze as support and resistance, and you will realize on your own that uh, you're able to find out where exactly the market could be heading. Okay, so here are simple rules, three of them. The first rule says there are two players, bulls and bears. All right, in this game of trading, there are two players, bulls and bears. Okay, bulls are programmed to push prices up, bears are programmed to drag prices down. Please remember, bulls are programmed to push prices up while bears always drag prices down. You don't need to, I mean, we don't need to tell them to take prices up or drag them down. All right. They are programmed to do so. Now, the third rule is really important, and even after 16 years of analysis of charting, I still apply this and I still remember this. All right. So it's so important that we all remember this for life as long as we are analysts. Now, after a high, they pull back, and after a low, they pull back. So what does it mean? Bulls, when they are playing the game, they are constantly creating higher highs. Okay. So when a new high is formed, we need to understand that they score a point. All right. They score a point, and once they score a point, they leave the market for a while. They pull back. All right. After the break, so let's assume that bulls are going. They will go for a coffee break for a while. Once the coffee break is finished, they will come back. Okay. And they will again, what they will again do, they will again print a new high, try to print a new high. Exactly the opposite. When a low is print, bears, they pull back. So after low is print, bears score a point and they go for a coffee break. And then when the coffee break is finished, they come back again. All right. That is how we need to interpret. This rule will help us determine whether this is the right time, it is the right time to enter the market, or should we wait, or what. All right. This rule is very important. Fourth rule, we will come back in a while. Let's understand this rule in a pictorial way. Okay. Okay, we are joined by Shuklaji. Thank you, Shuklaji, always for coming. We've just started the support resistance story here, and let's continue. Please pay attention to this graph. Those who are joining it for the first time or watching it for the first time, this picture is very important for us to understand that how the market is trying to move, how bulls and bears are playing the game, and what is the common mistake that every trader means every trader includes every one of us. It's a common mistake that we all have done, and how to get rid of that, how to not do that mistake. Okay, so sit tight and enjoy the session here, the screen here. Okay, let's start from the lowest point. Now, in this particular wave, bulls are in control, right? At this point, bulls have might have made a new high. Remember, all this is not there. Here, bulls might have print a new high. So after printing a new high, what happens? They pull back. So see the market driving lower. Okay. At some point in time, the pullback is complete. The break is over. So what happens? Bulls again score a new point, a new high. Above that high, a new high is scored, a new point. What happens after that? Ideally, they pull back. Again, they print a new high. Ideally, what should happen? They should pull back. But here, the previous low was taken out. So who scored the point here? Bears scored a point. All right. Bears, I repeat, sir, Bears just scored a point. All right. Okay, we've been again joined by Abrar. Thank you, Abrar, for tuning in. I think if you guys are facing any other technical issue, please let me know. Okay. Okay. So Bears scored a point here. What happens after point is scored? Okay, Muhammad Bhai, Muhammad ji, any time frame. any time frame. This process is applicable to any time frame. Okay. So bears score a point here, but generally speaking, hourly chart is one of the best time frames to analyze and set your predictions. Hourly chart is one of the best time frames to set your predictions. And 85% of the time, most of the traders, I mean, I personally like using the hourlies and 4 hourlies. We will discuss the time frames again in details uh, in this in the session of risk management and time frames. So bears score a point. After the point is scored, what happens? Okay, Mr. Feng, I unfortunately I do not understand Chinese here. So if you can type in English, or if you want to speak in English, you are free to do so, sir. Mr. Fang, if unfortunately Chinese is not spoken by me, uh, so if you want to speak English, or you can use your mic, please, and I think I can help you that. Okay, it's very important to know this rule. Bears score a point, then they pull back. Yeah, please. Someone is speaking. Is anyone wanting to speak? Okay, I just heard a mic there. Okay, no problems. Okay, let's continue, sir. Again, score a point. They wanted to pull back, but who scored a point here? Bulls. Please understand this picture. Here, the Bulls were playing, the Bulls were in control. Here, the Bears were in control. Again, the Bulls came in control. See, Bulls score a point, they pull back. They score a point, they pull back. Again, they score a point. Most probably, let me please ask you a question here humbly. Most probably, what should happen over here at this point? Most probably, what should happen? Ideally, it's not a rule, but ideally, what should happen?
Pullback.
Yeah, so I don't know who answered, but it's a perfect answer. Ideally, markets should pull back. We don't know whether it's going to do it 100%, but we know that there is a new high which is in place. So ideally, market will pull back, and it is not the right time to enter the market buying. We should wait for a pullback to buy. All right. Now, most common mistake that most or everyone has made, every one of us has made, and because it is very psychological, psychologically, when there is a high and there is another high and there is another high, like what is happening in gold right now. Every week, every other day, the yellow metal is printing new highs. So psychologically, when you are at the highest price, you start listening to the noise in the market and enter buying the market at that price. Most of the time, market is actually preparing for a pullback, and it is quite possible that when you bought, the market is preparing for a pullback, and when it pulls back, we start fearing because we don't really understand that this is a pullback. We think that it's something wrong going on, and by the time prices completely are in a completion of pullback, prices are so low that most of the time we exit taking the losses. And that is where again the pullback completes and markets start rallying towards the same direction that we bought earlier. All right. And then we get frustrated that we did the right thing, but we could not hold it properly, and markets are again the same direction. This is the most common error If it is investing, it is still okay, but if it is trading, it it may lead to big huge amount of losses. All right, so we've got to be careful. Now you understand the story of a new high, point scored, and pullback, a new low, point scored, and pullback. So please remember this, and this will be useful when we do an exercise as well. I will ask a question then, and we should be able to answer then also. All right, let's continue, please. I've shown a chart here depicting the entire story. Brother Matthew has joined us. Thank you for joining, Matthew. So now look at the story here. That's a real chart. A high pullback, another high pullback, another high. It wanted to pull back, but who scored the point here? Bear scored a point. So what will happen? Ideally, they will pull back. Again, a new low. They wanted to pull back, but resistance was taken. No problems, Matthew. We've just spent about 5 minutes, not more than that. So the actual support and resistance story is still left. So it's not this. And later on, if you still want, I will cover it up. Don't worry, please. So again, in this section, bulls came into picture because that resistance or high was broken. They scored a new high. So bulls scored a point here. Again, pull back, point scored, pull back, point scored, pull back, and point scored. And then there was a big pullback. All right. So this is how the markets will move, and this is how it can help us identify what to do, whether we should enter the market, the timing is right or wrong. Now let's go to the support, and then we'll define resistance, and then we'll go on the charts. Now before we know support, it is important for us, everyone, to know what is a low. For those who are joining in YouTube from YouTube, please type in any questions that you may have, and I'll take it during the session. So in this screen, the left hand side, if you watch the diagram on the left hand side, imagine and visualize that these are 5 candles. Now the middle candle low is lower than 2 candles to the left and 2 candles to the right, correct? So that is a technical low. If you flip your hand upside down, palm facing your eyes, it will look like this. In that case, your middle finger is the lowest one. The low of the middle finger is the low. On the right hand side, it is not the case. We don't have a low yet. Why? Because there are 2 candles on the left whose lows are higher than the previous low, but there are no candles on the right whose lows are higher than the current low. So this current candle cannot be defined as a low. All right. Now low is important. It is important for us to know a low because when we are trying to buy any particular instrument, our stop loss ideally goes below the current low or the previous low. Exact strategy will be known next story, but that's the reason why we should know what is a low. All right. So knowing what's a low, we can now define what's a support. Please listen carefully, and then I will take on a printed chart. Yes, Matthew, a pullback. No, it's not premature at all. It's absolutely related. A pullback will end without breaking a previous low or high. See, it scored a point, then pullback. Now, this pullback is ending higher than the previous low. So the pullback will complete before it will not break a low. Again, see, a new high, a pullback. It did not break the previous low. Now, a new high, the market wanted to pull back, but this pullback broke the previous low. So this is no more a pullback. This is a temporary change in trend. So here, who scored a point? Bears scored a point. Here, who was in control? Bulls were in control. Bears came in control here, and they scored the first point. So what will happen? Ideally, they will pull back. So here's a pullback. After the pullback is done, they score a new low below that low. Again, bears scored a new point. Ideally, what should happen? Pullback. While they were pulling back, they took off a previous high. That particular high was taken out. So here, who's back in control? Bulls. Again, now the trend is changing because the high is taken out. So from bears again the game is flipping to the bulls. So market is expected to print higher highs. So first high, pullback. See, this pullback doesn't take out the low. So that's how you determine whether it's a pullback or a trend change. I hope I answered your question, Matthew. Okay, so if it is answered properly, then let's move ahead. Okay, thank you. Now, please listen carefully because this is today's session. We are we are actually starting the session now. Okay, so let us define what is a support, and then we'll find out what's a support. Support is a low which has got two criteria attached to it, and please remember both criteria should be complete. First, it should be higher than the previous low. That low is higher than the previous low, and the market has print a new high. Okay, two criteria should be fulfilled. One of them fulfilled, it will not work. Okay, supports are created in a rising market and they are broken in a dropping market. And please remember, in a rising markets the significance is of the support, not of the resistance, because in a rising market, unless the support is broken, unless a critical support is broken, the market is going to go higher. Okay, so we need not really worry about resistances, they are anyways going to be broken. Now let me show you in a pictorial way so you'll understand very easily and clearly. Okay, look at this chart please. This chart, let's identify supports here. Before we identify supports, can everyone visualize that all these 4 points, 1, 2, 3, 4, there will be a bunch of 5 candles which we defined as low. There will be a bunch of 5 candles at every this point. Can you visualize, sir? So there are 4 lows on this chart. Do you all agree? We already have 4 lows on this chart. Now let's try and define support. Now look at this low. This low is higher than the previous low and market has printed a new high, correct? This particular low is higher than the previous low and market has printed a new high, correct? So can we define this as support, please? Can we define this as support? Oh, I think it's a huge one, right? Okay. Similarly, if you look at that support, if you look at this point, it is higher than the previous high, previous low, and a new high is in place. So this also becomes support. Similarly, that point, higher than the previous low, new high is in place. So this also becomes support. And if we talk about that first point, if market has made a, if market historically print a low here and then started, I think I need to take a thinner one. Okay, vanishing. Okay. If market prints a low here like that, this one will be a support, correct? And if there is no historic low, but the market starts from this point, that will again be a support. So how many supports we have? Support, 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 and support. Is it? All of you agree with me on this part? We have got four supports here. All of you agree with me, please? We have got four supports here. If you agree, kindly acknowledge at least one okay will do. If you all agree with these four supports, we can go a step further. Can we label the supports? Can we number the supports? 1, 2, 3, 4. So if I say S1, S2, S3, and S4, is it okay? Let me please ask you with all humility, is this okay? What I've done here? S1, S2, S3, S4. Specifically those who are joining for the first time. Uh, Let us make it very simple, Matthew. Yeah, Matthew, what I'm saying is, I'm answering your question too, but let us make it very simple. Let's not discuss about impulse because that's an Elliott wave theory. We are not discussing Elliott theory here. So let's keep it very simple. The simple rule is a low which is higher than the previous low and the market has printed new high is a support. Simple. Now this point is higher than the previous point and the market has printed a new low. So this is a support. What you said is also correct, but it is a bit complex. We have tried to simplify here. Only simple rule, correct? All right. Now the second, yeah, more important technical analysis is more about simplicity. So Anthony, now coming to your, I think, okay, Anthony said S1 is not a support because we don't have historic view. All right, sir. If I print like this, now is it okay, Anthony? If I show an historic support, historic view like this,
Yes, sir. It's okay that way.
now it is okay, correct? Now let's say there is no history. Technically, there is no history. Prices started from here. Then also, since there is no history, it is okay to define this as support technically because it is starting from here. We don't have any history at all. All right, so it is okay to take this as support one. It's an exception of the rule that we just discussed. That's all. All right, brother. Now, are we all on the same page that we have got four supports here and I have done this numbering. Are we all do we all agree that this is correct? Okay, Matthew is agreeing that it is correct. What about you, Anthony? Okay, Anthony is okay. Understood, barabar. But then, do you agree with S1, S2, S3, S4 like this, Mr. Fang? I don't know, but I'm really sorry. I cannot.
Yes, sir. I agree with you now. I agree totally.
Okay, okay. I also assume that Isaac, Mohammed, Rohit Bhai, and Shuklaji. Okay, they are all second. They have already done this, so they all know what we are trying to discuss here. Okay, Mohammed Bhai has also agreed. All right, sir. Now there is one catch over here. The Please understand and listen carefully. It's okay if we take time, but we should take time and understand the basics very clearly. The creation of support is from the low. So S, the creation begins from the lowest point, but the breaking begins from the highest point. So this S4 is incorrect. This should be S1. All right. This is S1, that is S2, this is S3, and that is S4. Is it understood now? Just imagine you are writing an article and you will say that okay, first the market will break S1 or S4, and then the market will break S3, and then the market will break S2, and then S1. How would it sound? It sounds illogical, correct? Because it is illogical. The first support which is going to be broke from this point, if at all it is going to be broken, it will be this one, right? So when you are labeling on the chart, brothers, pay attention please. When you are labeling on the chart, you have to label S1, S2, S3, and S4. Is it okay now? Okay, okay, perfect. So now let's go ahead for the next screen, please. Sometimes this eraser doesn't take it off. That's the problem. Okay. So this is how we label the chart: S1, S2, S3, S4. And this is how, okay, now please pay attention on this particular chart. I am showing you steps to find out supports on a chart practically. This is a picture chart, not a real chart. But if you follow this step, then you will never make a mistake in identifying supports and resistances. Okay. Now, please remember, supports need to be found on a rising market. You need to find supports in a rising market, not a dropping market. All right. So first find out a rising market. Now, this is a rising market. All right. So first thing is clear. Second point, catch the highest point of the rising market. Do you see the current market here? It's not the current market. I should have written the highest point here. This is the highest point of the rising market. Okay, so catch that highest point, and then move your eyes, incline lower, incline lower, and stop at each low. That will be your S1, S2, S3, S4, S5, whatever. Move your eyes, incline lower, and print S1, S2, S3, S4. Is that clearly understood, sir? Matthew, Anthony, Mohammed, is that clearly understood, please? You cannot move your eyes inclined upside. You have to move. Mr. Yang, is it? I hope it is clear to you as well. Okay. All right. Perfect. Thank you for acknowledging. Once again, I'll repeat: catch the highest point of the market. See, this way you will never make any mistake. because you have caught the highest point. That's the market has printed a new high. From there, anything on the lower side has to be support 1. Anything on the lower side has to be support 2, support 3, support 4. But if you don't catch the highest point, and if you start the other way around, there are chances that you may make mistake. All right. I'm not saying that you will make mistake, but this way you will never make mistake. Okay, let's go to the next one now. I think it's resistance. Now, as we did support, for resistance, we need to see the high. Now, just put your hand, your palm facing your eyes, and it will look exactly like this. The middle one is the highest point, and that is the technical high. So the rule says 2 candles to the left and 2 candles to the right. Their highs should be lower than my high. If that is the case, then I am the highest point. Okay. On the right hand side, there are 3 candles on the left, but no candle on the right. So this is not a clear high yet. All right. I hope it is clear now, because it's not going to take much time to do resistance after understanding support. Resistance is a high which is lower than the previous high, and the market has printed a new low. Resistances are always created in a dropping market, and please remember, when the market is dropping, significance is of the resistance, not of support. Because when the market is dropping, bears are in control, and bears, when they are in control, they will always drag prices lower. So they will always break previous lows. All right, we don't need to focus on that. But if the resistance is broken, then we have to pay attention. I hope this point is very well taken, and this is the only point which will help us determine whether a potential trend is changing, temporary or permanent, or it is just a pullback. All right. So here can we identify highs? I'm sure all of us will agree this is a high, that point is a high, because there are a bunch of 5 candles here, correct? And if I say R1, R2, R3, R4, all of you agree now? That high is lower than the previous high. Market has printed a new low. R. That high is lower than the previous high. Market has printed a new low. R. I hope all of us agree that we have done R1, R2, R3, R4. Yes, we are doing it in a real example. Okay, I think there is a confusion here, so let's do it again. Let's do it again. Okay, Anthony is clear, but I think Abrar and we've got some doubts there. Okay, let's simplify, sir. All of you agree that these 4 points are highs or not? Acknowledge, please, if you are with me until now. These 4 points are highs. Yes. Okay. All right. Now let's pick up this point. This point is lower than the previous high. Yes. And the market has printed a new low. So can I write this as resistance? Please acknowledge if you have understood this point. Matthew, lower than the previous high, and market has printed a new low. Abrar, Abrar, we are going to do practicals on the chart, so it will be example. Okay. Similarly, this is also a resistance. Can I say this is a resistance? Lower than the previous high, market has printed a new low. Also, can I say this is a resistance? Okay. And if there is a new high like that, Can I say this is resistance as well? So do we have 4 resistances on the screen? All of us agree? Perfect. Now, the next question is, okay, if this was, if there was no history, again, we would still consider this as a resistance. I just explained in support. So there should not be any problem in understanding. Now, the next is how to label the chart. So the resistance creation is from top to bottom, but the resistance break will be from bottom to top. So is it okay if I write R1, R2, R3 and R4? Is it okay now, everyone? Is it now clear why we are writing R1, R2, R3, R4? All right, even further simplification if you have not understood. Okay, I will explain even further. Where is the current market price? Where is the current market price? Yeah, okay, I think it's clear. But still, one last time. The current market price is here. Which is the first resistance the market will break if it is doing something else? Is it this one or that one? Obviously, it is going to break this one, correct? And that's why I'm writing R1 here. I hope it's absolutely clear now, without a doubt. So now the screen is okay. R1, R2, R3, R4, everyone. I think it should be clear now. The eraser sometimes is behaving very hayward, so kindly excuse me if everything is not erased. Okay, and I don't want to waste much time in erasing. Okay, okay, those who are watching live on YouTube, please, if you have any questions, feel free to type in there. I will address it. All right. Okay, let's go back. Let's go to the next one. The rules to draw resistance. Again, the rule is very simple. Catch the lowest point of the dropping market. Catch the lowest point of the dropping market. This is the dropping market lowest point, sir. All of us agree? See, some things you need to put into your subconscious mind. It will take time. It will not happen first time. We are all going to make mistakes. 100%. If you don't make mistakes, there's something wrong. Initially, we have to consciously put effort, and then it goes into the subconscious. And when it goes into the subconscious, then you don't need to do anything. Then subconscious will take care. But initially you have to tell consciously, oh, this is a falling market, sir. Okay, what Harsh said, Harsh was saying catch the lowest point of the falling market. So which is the lowest point? Okay, this is the lowest point. Okay, now he said move your eyesight inclined up. Okay, so let me move inclined up. Stop at every high and write R1, R2, R3, R4. So consciously you'll have to put effort first of all. Okay, suddenly what you will say is after R3 your eyesight will go like this. Again you will say R4 here. Then your conscious mind will say, oh boss, you are making a mistake. What Harsh was telling was you have to move your eyesight inclined up. Here your eyesight is going inclined lower. So this is not correct. Let me correct. So this R4 you will delete, you will put R4 here. Then you will put R4, R5 there. Understood, sir? It's very important. It's a very practical thing. But if you follow this very simple rule, even if you want to make a mistake, you will not make a mistake in finding resistances. Is that clear? If it is clear, please acknowledge. So I will go in the next screen. If it is not clear, let me know. I will explain again. We are very close to identifying the market where it is going to go. I'm going to make you analyze two charts. Before we end the session, you are going to analyze two charts on your own. I'm not going to say anything, and you will do it with supreme confidence. Okay. But before we go to the charts, one last rule. Yes, Matthew, between R1 and R2, there are other highs. You can consider them. No problems at all. Okay. Between R1 and R2, there are other highs. If you find other highs, according to the rules, you can consider them. There is nothing wrong in it. Now, this is the last rule. Please listen carefully. In a rising market, past resistance has got potential to become future support. Past resistance has got potential to become future support. Rising market. So let me bring the rising market. And in a falling market, past resistance, in a rising market, past resistance has got potential to become future support. So PR is becoming FS, short form. In a dropping market, past support has potential to become future support. So PS is potentially becoming FR, short form. I have to show you in picture, then only you will understand. So just give me 1 minute. First, I'll bring a rising market. Rising market, sir? Okay. This point is this point is resistance, which got broke here. See, it is potentially becoming support here. Past resistance potentially becoming support here. Past resistance. Let us say the market is dropping at this point. Let us say the market is dropped to this point, and if it forms a tweezer bottom, exactly where my mouse is right now, let us say the market is right now here, and a tweezer bottom is formed. What should we do? Ideally, uh, my brother Feng, I'm really sorry. I cannot help in this language. If I don't know, I don't have a translator as well, so I don't have a translator as well, so it's okay. But I'm really helpless in case of this language. So what should we do here? I think Mr. Fang told that we should buy. Why we should buy, sir? Because the market is producing a tweezer bottom right at the previous resistance becoming future support. This is the previous resistance becoming future support, and market is producing a tweezer bottom. Everyone, please listen carefully. You should go and buy this. Okay, Mr. Fang, I'm really sorry, but I'm helpless in case of the language problem here. If you can translate that into English, then I can address your question. If you have a translator, if you can translate in English, I can address your question. Others, have you understood past resistance becoming future support, please? It is not a rule, it is a potential. Past resistance has got potential to become future support. All right. And similarly, past support, this is past support, has got potential to become future resistance. Past support has got potential to become future resistance. Okay. Now let's go to the charts, please. So two strategies. Whenever you see a rising market, yes, it can be a slightly lower or higher, Matthew. But the point I'm trying to make here is that the area should be similar. It can go a bit deeper, that is fine. The only thing that you need to see the area. So one strategy you need to put in a subconscious mind, everyone, in a rising market, you need to identify bullish signals. Where you have to identify bullish signals? Near past resistance region and buy. In a dropping market, you have to find bearish signal. Where you have to find bearish signal? Near past support region and sell. Okay. Now we are getting very close to convergence points. First session only candlesticks. Second session, now support resistance is added. One more story, you will be 85% there. Trends will be completed. So now let me take you on the chart. All right. Can you see the chart here? Okay. Now I'm going to identify. Now this is a rising market, correct? This is the rising market. You see how the market has moved. Earlier the market was dropping. That is a dropping market. So I'm going to do dropping market point and then I'm going to do the rising market points. So I'm going to hide the rising market for a while. And here you have a beautiful dropping market, correct? So how to identify the resistance, sir? Catch the lowest point of the dropping market. Here's the lowest point of the dropping market. Okay? Lowest point of the dropping market. Move your mouse pointer, move your eyesight inclined higher. So, and stop at every high and start printing R1, R2, R3, R4. I can print R2 here. I can print R3 here. Now I cannot go down. I have to go up. I can print R4 here. I can print R5 here. Is it okay, everyone? If you have understood, kindly acknowledge so I can move ahead. Okay. I am assuming that Anthony, Mohammed Bhai, everyone is clear. Abrar, are you clear, my brother? Abrar, this is a practical scenario. R1, R2, R3, R4, R5. Okay. Now see what happens. This market from the lower point, the lowest point over here, this market started rising, and at that point, what has happened? Exactly this point. What has happened? Who has scored a point? Bulls have scored a point. Why? Because the first resistance was taken out. Matthew, now your question is more relevant, correct? Now this is not a pullback. Now this is a trend change. So at this point, who scored a, at this point, who scored a point? Bulls. So Bulls scored a point. What should happen? They pull back. So they pull back. Now, where should the next target be? Where should the next target be? Now the Bulls have started playing the game. Where should the next target be? I need the answer from your side, please. The logic is there with you. Market pullback is complete. Now the Bulls are back. Where should the Bulls go? Exactly. Anthony, now did you face any difficulty in answering this question, my brother? You just wrote taking out the next resistance. So the next resistance is here. The next resistance is here. It is already taken, so I'm picking up the next one. Next in line is this one. Okay, let us see what the market did. Taken? Did you see that the resistance was taken? The next resistance, Anthony? Matthew, are you here? Matthew, Anthony, Mohammed Ji, Abrar, Mr. Yang, Shukla Ji, everyone. Are you all clear, sir? I know we are all, many of them are doing for the second time, but Isaac, are you clear,
Yes,
my brother?
yes, sir. Yes, thank you, sir.
Okay, okay. Okay. Now, R3 was taken. There was no break because it's not a rule. Ideally, it should take a break, but then the market was moving very fast. So it took R4 also. It took R4 also. Is it okay? It has taken R4 also. But see the beauty. After taking every resistance, most of the time it is pulling back. See, here it pulled back. Now, after taking R4 also, it has pulled back. You see that pullback? Now, don't worry about the pullback when it is going to get over. You will know when the pullback is going to get over in the next story. But I am saying that the pullback is possibly over. Where should the market now go? Do you all agree that the market should now go to the next resistance in line, R5? Yes or no? Everyone in this class, will you be able to tell with confidence that the markets would ideally go and take the next resistance out? Do you all agree to this or not? Unless something else happens, ideally the market would go and take the next resistance out. Please, if you are with me, kindly acknowledge so that I can understand that we are all in the same page, on the same page. Ideally, the market would go and take the next R5. Do you all agree to this? Now, tell me, did you find any difficulty in identifying this story? Now, can you find out a price? The price here is 1.11. The price of R5 is 1.11. So if someone asked you, if someone would ask what should I do in the euro, can you say that you can go ahead and buy here? Maybe you don't know the exact stop loss, but you can say that this is a potential low. You can place a stop loss here below that point and target 1.11. Please write it down, this analysis which you have done on your own. I have tried to just help you out. And with this analysis, you have done this analysis by only knowing two stories. The first one is candlestick pattern, the second one is support and resistance. Does it make any sense to all of us now? Just by knowing the stories of support and resistances, we can more or less identify where the market is heading. Not with 100%. No one can say with 100%, but even if we can do it with around 80% probability, believe it or not, we are better than the rest. Most traders, I'm not talking about any other, most traders are trading 50-50. All right, 50-50 probability. Now that is not a trade, it's a speculative. Let me just bring up one more, last 2 minutes, and then we'll bring it at pause here. Once again, a humble request. Yeah, you need to consider WIC. You need to consider WIC. Once again, a humble request to all of you, if you're liking what you're seeing or what you're going through, please send in email feedbacks. It will help us a lot. It will take a moment, but if possible, please send us feedbacks. Now I'm also giving you the email address at the end. Now pay attention, please. I'm typing in the rising market past and current supports. Where do you think the market should be going now? Where do you think probably the market is heading now? Or the market should ideally be going? Where do you think so? There is no hurry. Please take your time. I have given one hint over here. I cannot give more hint than this. Okay, we've got one answer. Matthew is saying 110. Mr. Fang, I'm really sorry, I cannot understand. But if you can translate, I can help you out. I don't have a translation here, so I cannot really help. But next time I'll find a Google translator. Matthew has said 110. Currently the price is 103. Any other answer, please? Any other answer, please? If you don't know the price, it's okay. Just say okay. Vinay Kumar Shuklaji says towards 100. Isaac says S3. Okay, RM Matthew has now corrected. He says 100. All of us are on the same page. Are we or are we not? See, 100, Shuklaji says 100, it is S3. Isaac says S3, same answer. Matthew has just flipped 110 to 100, same answer. Anthony, what do you say, brother? Do you agree to this? Mohammed, Anthony, Abrar, Mr. Fang Wang must have answered, but I don't know what it is. Anthony is also saying 100. Abrar, now is it clear, my friend? Abrar, practical example. Now is it clear? Isaac is clear.
Yes,
Muhammad is
yes,
also clear.
yes, sir. Yes,
Okay,
sir. Thank
perfect.
you.
I also hope that Rohit Bhai, you are clear, and Shuklaji already answered. So all of us in the same class, all of us are with the same answer. Amazing. Amazing. So we have done the second story, support and resistance, and just by giving a glance on the price action, if we are able to predict or project potential direction going forward, everyone is saying $100 index. Please note down, we just analyzed Euro USD 1.11 target, and we just analyzed dollar index potential target 100. Please watch how it goes. That will give you immense confidence. I'm telling you, it will do extremely good to your analysis. All right. Now just imagine only two stories, and if we are going to do this, what will happen after four stories? Where will your confidence go? Make sense? All right, we have already done the practical implementation, and I have missed to write down the email address in the presentation. I am going to write my email here in the chart. I hope it is all clear now, the support and resistance story. And let us bring it a pause here. If you want to send in feedbacks, you can send in here. Feedbacks or any other thing that you might want to ask or let me know, you can write it here, please. So this session, I'm bringing it a pause now. And once again, I would like to thank you, everyone. Thank you, Anthony. Thank you, Mr. Rohit. Thank you, Mohammed. Thank you, Fang. Mr. Wang, I'm really sorry. I don't know. I cannot help you in Chinese. Thank you, Shuklaji. Thank you, Matthew. Thank you, Isaac. And thank you, Abrarji, for joining in this session. We will we will see each other tomorrow. We will do live analysis in Hindi. I would really appreciate your time, Mr. Wang. Thank you again for your comment. I would really appreciate if you can write an email with your feedbacks, because those are the feedbacks of the sessions that we are doing here. It will go to the management at the right time. So your feedback here, the chat room is okay, it's being recorded, but your email feedbacks will really help us improve going forward. All right. So once again, thank you everyone. And until tomorrow, that is a live session, 4 p.m. Dubai time. I would love to see you everyone. And until the next session, thank you once again for your time and take care. Goodbye. Thank you again, Mr. Wang. I really appreciate your presence here. And I apologize again for not being able to address in Chinese. Thank you everyone who have joined from YouTube.